former chairman. He's actually served on the NCUA twice now. This is his second time becoming chairman in 2019. In his capacity on the board, he also is a representative for them to Neighborhood Works America. He also has private sector experience as well. As the corporate responsibility manager at JP Morgan Chase, as well as work at other financial institutions and the Department of Agriculture. So we're very excited about this conversation. I'll tell you, as I was reading your bio, I took away a couple things. One, we are actually alums in two different cases, one from the Bush administration and then one from traditional finance. So Amazing. We find ourselves in a very unique environment today, and I think are excited about the conversation on fintech. But most importantly, I think what I took away from your bio was really your public service, both in the public sector and the private sector. And I think that really speaks to you, and also I'm looking forward to having this conversation as a result of that. So thank you so much for everything you've done.
Angelina, thank you for hosting this panel with me. Penny, hats off to you and all of your colleagues at FTA for convening this first FinTech Summit. I must tell you, I'm very pleased to be here for a number of reasons. One is because it gives me an opportunity to underscore the important role that I believe FinTech plays in our credit union system. I look at FinTech as perhaps the most important thing credit unions can do to serve their members in today's dynamic marketplace. I think pre-pandemic, a lot of us thought of fintech, oh, isn't this nice? Isn't this a luxury? You know, it is a strategic imperative. And when Angelina was talking about the work that I've done, that sort of from all of my days in financial services and agriculture, and by the way, that first role in agriculture, I was a Bush appointee. I was the Deputy Administrator of Housing within the Department of Agriculture. So we're looking at affordable housing and financing, in case you were wondering if I had this farming sort of background before my career in financial services. But you all, I've always wanted to help marginalized, underserved communities. And if credit unions are going to be able to serve their members in today's environment, they're going to need to use technology, especially some of the smaller institutions that are there. And I told Angelina I would give you all a little bit of a primer on NCUA, because I don't think many of you know who we are as a regulatory entity. NCUA stands for the National Credit Union Administration. We are one of the financial regulators here in Washington, D.C. We work alongside the ranks of the FDIC, the Office of the Comptroller of Currency, CFPB, and the Federal Reserve. Our specific remit is to ensure the safety and soundness of our credit union system. We set the regulations, the policies, and we also have a bit of a bifurcated role in the fact that we not only do policy making, but we insure deposits. So that is the role that we have that's a lot similar to that of the FDIC, in that we are insuring deposits up to $250,000 per account. The thing that I would like for you all to leave here with is credit unions have continued to grow amid the pandemic. We now have credit unions that represent 132.6 million members throughout the United States. We have a little under 5,000 credit unions that are, again, around the country. Our largest credit union is about $130 billion with offices in 25 different countries. And one of our smallest credit unions is about a $200,000 credit union that's in the basement of a church that's only open on Sundays. So there is a full panoply of diversity within our credit union system. And the one thing that I want to do as a safety and soundness regulator, I want to give them the regulatory empowerment and flexibility that they need to serve their members, to live out their mission. By the way, the credit unions are very mission-based. Their ethos that stems from the Great Depression as people helping people. And I, as a forward-thinking regulator, want to give them all the tools that they can embody people helping people. And I think fintech is one way that they can do it.
Well, thank you so much. And I think, you know, we all share that view, I guess maybe is a good way to start the conversation. Let's talk, I mean, delve a little deeper into that. I mean, you know, maybe two questions. One, you know, how do you really see the future of fintech and credit unions working together? But also, two, how are you focusing on innovation within NCUA?
Good questions, both of them. First of all, you ask about the future of credit unions and fintechs working together. Well, you know, that future is already here. They are doing that now. They are already, in fact, there are many fintechs, some of them who are here with us today, that are working with our credit unions to give them the access to quicker opportunities for loan originations, better opportunities for ferreting out data to see how are we going to be able to provide this small dollar loan to someone who's just beginning their credit journey. Otherwise, if they don't use some of the tools, we leave many Americans vulnerable to pernicious and predatory payday lenders. So credit unions are now able to work with fintechs. We're helping them with a number of tools. Credit unions are also, I'm very proud of the fact that they are pretty much meeting with me often saying, when can we do more? And what do I mean by that? The credit unions want to know, how are we going to give them more regulatory empowerment and flexibility? So one of the things that we're looking on at NCUA is how do we provide credit unions with the opportunities to invest de minimis amounts in some of the fintechs that are in our community now. What are we also doing? From the moment I came to NCUA, Angelina, and if anyone knows this in this room, it's definitely also Joanne Barefoot, as I have always wanted to pursue a fintech office. So I'm very proud to let you all know that NCUA will be opening up its fintech office, I hope by the end of the year. And I'm very intentional about it being called the Office of Innovation and Access. This is not innovating because, again, it's what all the cool, glamorous folks are doing, but I'm looking at it through the lens, through the proper deployment of innovative tools, we should then be able to spur greater financial inclusion and access. That means that those 40% of American households who can't obtain $400 in an event of a family emergency, well, now we're hoping to give them the tools that we can do that and get there to pull that intervention before they go to the payday lender. Or those 45 million individuals in America who are credit invisible. How do we use technology through our new office to reach some of those? And if I can, a little bit of a sidebar, when I talk passionately about financial inclusion, it's undergrounded in the fact that I look at financial inclusion as the civil rights issue of our generation. It's a civil rights issue in the sense that without a credit score, many of our individuals that we know every day, here in Washington even, they can't get the job of their choice because they don't have the appropriate credit score. They can't live in the appropriate apartment or house, and that determines then where they get to educate their children. And in some instances, it means that they are just, again, left in this viral spiral of just not having access. So when I talk about it being a civil rights issue, it's because of what I've seen fundamentally. So the FinTech Office of Innovation and Access is going to be coming. I'm hoping, by the way, we announce the candidate soon. I was wanting to do it today to have something newsworthy, but as you know, we sometimes have to be a little more methodical in government. With that being said, the office, though, is poised to open, I dare say, by the end of the year. And it's not going to be an office that is going to stifle creativity. What I want this office to do, from again, sessions with the folks at AIR, with meeting with some of my counterparts at the Financial Conduct Authority and beyond. We want regulatory sandbox opportunities. We want to do tech sprints. We want to look for opportunities to find ways for the credit unions to have these synergies with the fintechs. So again, it's through partnerships, and I cannot wait for this office to come into existence. And by the way, I was very proud of the fact that other regulators have too mentioned their efforts to have offices of innovation. You all probably read here that the OCC is going to enhance its Office of Technology. Also, Federal Housing Finance Agency, another regulator, they are also having an Office of Innovation. So as we all are pursuing these opportunities, I think it just shows that there's a willingness in Washington to think forwardly. I think there are many people who don't think that the regulators are doing enough in this space, and I would counter that, hey, look at some of the things we're doing now. And I think another idea that I would have is I'd like to get the financial regulators to do a panel such as this, where we all talk about what are some of the things that we're seeing and doing within our respective agencies.
Absolutely. No, and I think, really NCUA, at least when I talk to folks in the audience, has really led the way when it comes to fintech and fintech partnerships with credit unions. I know I was speaking with someone during one of the breaks, and they said, by far credit unions are really partnering with fintechs in a, expedient way, as opposed to, say, the smaller banks. And part of that is, I think, because of the regulatory tone you have said at the top at NCUA. Can you delve a little deeper just into how within NCUA you're really trying to cultivate knowledge around fintechs?
That's a really good question. Cultivating knowledge by bringing in outside speakers and experts to talk to all of our examiners, to talk to our risk team, to our general counsel, making sure that we're sharing best practices and papers such as been originated by the Alliance for Innovation and Regulatory Affairs, AIR. Also, you all, recognizing that The fintechs are not waiting for Washington to keep up with them. They are really operating at the speed and sound of business. So at every moment, once a week now, I launched a few months ago a fintech discussion series where we bring in the fintechs that are working in partnership with credit unions to our agency to walk us through not their business plan. I have to tell them, this is not your chance to pitch. We're not Shark Tank giving you funding, but what we are wanting to do is to make sure that we understand your fidelity to consumer protection, fair lending, fair housing. So in doing that, our regulators, our examiners, they now have a better understanding of who the fintechs are, and we look at them as third-party vendors. So we're bringing them in, and you all, these are 30-minute conversations, about 15 minutes of presentation, 15 Q&A. And then if the examination team wants to do a deeper dive, we bring them back in. But the main thing is wanting them to know we're not here to micromanage your business. We're not here to tell you that you shouldn't work with credit unions. We want you to know that we have a very forward-thinking approach, but at the same time, we want to make sure that you are looking at consumer protection. That is the main thing. We've been doing them every week, and I will continue to do them because I think it's the right thing to do.
Absolutely. No, and I think, it's refreshing to hear that focus I'll say this, within a federal regulator. I think most folks know I come from the traditional banking sector. And so, I think it's laudable for that. One of the other things, you've talked a lot about diversity and inclusion. Mm-hmm. I know in our prep discussion and also in my reading before, you had a very powerful statement op-ed that you put out, and then around George Floyd's unfortunate death, and really with a focus on really creating opportunities within communities. How are you focusing on that right now, and how do you see fintechs really helping to lead the way there?
Another good question. And what Angelina, she's referencing is we're all working remotely during that tragedy concerning the death of George Floyd. And I'm sitting there, and what many of you may not know, I became, when I was announced as chairman of NCUA, it's the first time a man of color, or a person of color for that matter, has ever been the chairman of a banking regulatory entity. So when I became chairman, I said, you know what, I get to look at a lot of different opportunities now through the lens of how I know being black has shaped me, and to see what happened to George Floyd, I wanted to do something demonstrable. I wrote an op-ed and placed it in the Wall Street Journal where I talked about banks and credit unions coming together to promote financial inclusion. Again, I mentioned it as a civil rights issue, but I talk about how they can come together to provide resources, whether it be financial health, financial capability, loans, small business capital. So that was one thing that we started. And then following the op-ed, I really wanted to do something other than just do a bit of writing. So we created a new entity within the NCUA. It's the Office of Access. That stands for Advancing Communities Through Credit, Education, Stability, and Support. And this group is going to be faced with working with a lot of you here in the fintech world, but looking merely through the lens of access and affordable lending and things of that nature. We also are going to have this person work with our MDIs, our minority depository institutions, also helping us with recruiting. How do we recruit a workforce that resembles the communities that we wish to serve, but also being that liaison to credit unions themselves and helping them with their diversity, equity, and inclusion activities. One thing that we're doing, Angelina, with this group, Access, it is going to rest within the Office of Innovation. So that's where we're going to have our fintech person, our head of access, all working in partnership around innovation and access. We at NCUA just also had our third annual DEI Summit. When I again was chairman, I got so emotional on the stage. I said, we should do this each and every year. We are doing it each and every year. And we just had our third summit, but we did something a little different this year. We now coined DEIA. So the diversity, equity, inclusion, and access. And on that panel, we were able to really demonstrate some of the things that need to be done with fintechs around how they can help us with marketing, outreach, but also you all in helping differently able or disabled communities. That was a point of mine when I think about diversity. I look at it very expansively. I know we tend to look at it through the lens of ethnicity and race, but from both of our days in traditional finance, I tend to look at low to moderate income. I look at rural communities, tribal communities. We mentioned disabled. What about veteran families? These are all the components that I think that we need to look at when we look at DEI and now a issue. So that was really interesting that we were able to have a broader discussion around how financial inclusion can work through fintech. And we had a number of fintech folks there. So
wonderful. No, that's fantastic. I mean, I know just sitting here and also looking at the audience, I know a lot of us are really moved by this focus and by, the work that you're putting behind the words. How can the industry engage in this effort and meaningfully assist in really making a difference?
That's a really good question. Well, one way that I think the industry can engage is by letting us know what it's on your mind. I get letters, I get emails, I go to a lot of convenings such as this, and I can only move forward with our agency and with our industry by knowledge. And again, this is not for the faint of heart, and it's so important that you're getting great knowledge, that you're going to convenings. I also like the fact that sitting where I sit, I get to talk to regulators all over the globe. I know you were just in Singapore. I was just in London, where I was able to meet with the Financial Conduct Authority, the Bank of England. The body of work that's coming into the space now is plentiful, but we need to make sure that we're reading and talking to the subject matter experts. I know one of the ways for continued engagement, at least from where I'm sitting at NCUA, we put out a lot of rules around, we ask for comments. If we're going to do an advance notice of proposed rulemaking, you can let us know what are the things that are on your mind. I certainly, for one, who believes that regulation needing to be effective and not excessive, I want to hear from you all. I want to make sure that there are not these unintended consequences that come about through maybe things that we may do as a regulator. So I want to hear from you all. We also are looking at maybe doing more town halls. In fact, this new fintech director, I guess you're thinking, when is Rodney going to let him rest or her rest? But I want this person to do some town halls. And again, that's something that I know the Federal Housing Finance Agency is doing as they build out their new groups. I think we too should maybe do some town halls. In this town, imitation is the best form of flattery, by the way. But I'm looking at, so you all, there are a plethora of opportunities for you to engage with us. And then you have people like me who are just, again, it begins with relationship building. And I hope today that some of you that I've not met in the fintech space, that I'll get to know you all and perhaps invite you back to present to our agency.
No, that'd be fantastic. And I think, I actually have two follow-ups here based on that. So, this could be an endless conversation. But, I think this is really great for all of us to take back and figure out how to be, the most helpful to you as you continue this mission. You mentioned going abroad and talking to some regulators who, arguably are maybe a little further along than in some cases we are here in the United States. What were some of the lessons learned from that experience, at least from you in those discussions?
That really is a good question. I would say that from my conversations in the UK, they were really among the first to pilot the whole concept of the regulatory sandboxes, getting together in the controlled, structured environment to look at the technology, but how do you find opportunities to really address some of the regulatory impediments and hurdles before that product or that invention is scaled. So those are some things that you want to start early and work with them through that lens. Another thing that I've learned, you all, and this, in fact, wasn't abroad, but it was something, again, at one of the AIR opportunities, and that was, as we build out our new office, let's make sure that we have legal counsel who is able to look at these opportunities through the lens of technology moving forward. We tend to find that traditional legal frameworks may not necessarily embrace technology to the degree that we'd like. I think that was pretty diplomatic.
Yes, you did a great job.
So with that being said, so those are some of the things that I've learned locally, but the main things, and also you all from talking to some of the regulators in India, what I've learned from them is they've been so advanced with payment systems and able to use technology by way of everyone there. They can be so remote, but yet tethered to one another through being able to do payments. And I mean, this even predates some of the other things, Venmo and Apple Pay. These are things that I've been able to see. So you all, I don't think there's ever been a better time to explore technology, to look at its use cases. And it's not to say it doesn't come with risk, but again, I believe that we should always look to mitigate risk as opposed to just avoiding the risk. So just make sure we identify what those risk points are. But the main thing that I've learned from traveling or even staying here locally, there's a willingness to share. The fact that I will sometimes read something, either the Financial Times or the Wall Street Journal, I'll just call the writer, I'll call the person, and next thing you know, we're talking about What were you thinking about this? How did you think about building out your shop here? So again, I think the one thing that unites us in this space is that we're all in it together. I don't think, at least to my knowledge, I've not seen any fiefdoms or anything like this. It's been this wonderful sort of sharing of knowledge and wanting to grow.
Absolutely. No, I think that's really helpful. And I think, our previous panel, just to touch on this quickly, talked a lot about open banking and, the CFPB's proposal that's out there. I mean, sort of curious if and how the NCUA has engaged with the CFPB on this, or just engages with regulators generally on some of these kind of key issues.
Of course, and it's a FIREA, again, that's the Financial Industry Regulatory Enforcement Agency. So I'm trying not to use the labyrinth of alphabets before you today, but we work in tandem with all the other financial regulators on a number of matters, and of course with CFPB. Our remit, when I talked about what we do at NCUA around safety and soundness of credit unions, we have our own consumer protection division, with the exception of those credit unions that are above 10 billion. So they are the ones who have full opportunities to work with the CFPB. With that being said, we work a lot with them. A lot of the rulemakings that we do in tandem with them. Regarding the open banking, it's one of the things that, of course, we get to meet with them, talk about what our opinions are. And again, as with many of the others that work in regulation here, it's about being stewards of the resources we've been entrusted. We want to look after our members, we call them in credit unions, banks, they want to look after their customers. Again, safety, soundness, consumer protection, fair lending, all of those things that we want to see. So yes, we work quite often with CFPB. We also work with them with the Credit Union Advisory Council that they have. I don't know if you all realize that, but CFPB does have a Credit Union Advisory Council. The Federal Reserve also has an advisory council where they meet with their entities. So again, one of the things that I don't know if people outside the room recognize is that the regulators work together. A lot of our rulemakings are done in partnership. One thing that we do in partnership is that we just put out a request for information regarding how are banks and credit unions using artificial intelligence and machine learning to help with BSA compliance. So that's another example of how we work together in partnership. So no one, for the most part, is working in a vacuum. I don't think you can these days.
I think that's fair, especially in DC. No. I think you have to have a group of people to get anything done.
Exactly.
But I think you also know that the moment we start talking about AML, that's also something that I focus a lot on and have focused a lot on in my career. Mm-hmm. We think about AML in two ways. I think from a tech perspective broadly, there's a lot of gains either from compliance or bankability. That I think that technology really can provide an opportunity for. Mm-hmm. Particularly as we think about know your customer requirements, mm-hmm. And maybe where technology can help us do better at knowing our customer, but also getting to the and underbanked universe. How are you thinking about these issues and other issues as we look at implementation of the Anti-Money Laundering Act of 2020? Well,
first of all, we at NCUA have always had an internal working group looking at the Bank Secrecy Act. We have a working group that works with FinCEN. When I was chairman, we met monthly, you all. There is no other group that I know of that has a monthly meeting with the regulators to address any particular topic, and it was around BSA. FinCEN we work with quite heavily. Regarding a lot of the AML work that's going on now, especially around the new announcement around the AML Act of 2021, we have a working group that's looking at any of the rulemakings that are going to need to come forth from it. Many of you know that there is that Corporate Transaction Act. That's going to require 3 separate rulemakings. So we are working quite collaboratively with the other entities. Also, we do a number of training sessions on BSA. We have workshops on it because, again, it's one of the things that I would say, second to cybersecurity, BSA and AML compliance is another one of those areas that keeps me up at night. I would be remiss if I didn't mention the fact that we have also invited a lot of the law enforcement folks in that look at our BSA and our CTR, currency transaction reports, and suspicious activity report filings. They come in and train our examiners on what are some nice ways to fill out the reports. We train the credit unions on what are some of the things that can best assist law enforcement when it comes to capturing the bad actors who want to do us harm. So we do an ongoing training session. In addition to that, we have a critical infrastructure security group within NCUA. They are helping us come up with a rulemaking. The other banking entities are doing this as well. What's going to be the rulemaking around 48 hours to 72 hours when there is a severe cybersecurity breach. So that's one of the things that you're going to see coming out. And by the way, you all from the credit unions, we have that out for comment now. So let us know, what are your thoughts on the 72-hour rulemaking? Some have said that's about right. Some have said longer. So we want to hear from what you all have to say regarding that. But going back to the question at hand, AML and BSA, they have been always a part of our supervisory priorities. As you know, each year we sort of give the industry, what are we going to be looking at this year? Well, the one thing that has remained constant, even from when I, as you mentioned in my introduction, even when I was on the NCUA board over a decade ago as vice chairman, BSA was on it then, and it's going to remain important. One of the things you all, if I could get your help with, is how do we better deploy technology to make sure we are really helping to onboard our credit union members? Are we really doing an effective job around knowing your customer and complying with it? I've met a number of fintechs that are working with digital identity and things of that nature, and I want to make sure that we are doing all that we can. So that's been an area that I really want to start leaning in on a little more. You've heard me mention about financial inclusion. By the way, sidebar, we just did a credit union quasi Shark Tank Light event. I have to give it light because if I say Shark Tank, I could be sued. So Shark Tank Light event where we had fintechs talking about financial inclusion and their tools around financial coaching and how to help with different savings accounts and things of that nature. What I'd like to do, y'all, in the future is maybe do one around digital identity and see what are some of the tools there. Because in the onset of the introduction, I mentioned 5 million new credit union member owners during the onset of the pandemic. Well, yes, I'm wanting them, I know that they've done a good job with KYC and all that, but how do we even make it even more streamlined? So that's one area that I think we can work with our fintech providers.
Absolutely. No, I think that's so helpful. And I know, from my past experience, in the banking space in particular, the rules were written in 2003. That's not the way we interact with any financial institution anymore. So exactly. I think I totally agree. There's such a scope there for us to move forward. And I know the other thing you mentioned that keeps you up at night is cybersecurity. You just published a Bank Think piece on that. How are you what's your message not only to credit unions, but also to the fintechs they partner with? And how do you think the relationship between credit unions and fintechs can help enhance the cybersecurity efforts within a credit union?
Well, I think the main thing that I would say is with cybersecurity, I tell folks that it's something that we need to be mindful of. Again, how are we going to mitigate risk? How are we going to batten down the hatches and make sure that we are doing multi-factor authentication? How do we make sure that all of your employees who are working in these regulated entities understand how to safeguard information? There are a number of fintechs that I have met with you all that are doing the cybersecurity tools that they have. We at NCUA have a cybersecurity assessment tool that we've rolled out. But the thing is, I think the fintechs that we're working with now, they recognize the importance of cybersecurity. So that's the one thing. I've yet to meet one who hasn't thought about this as a challenge. And it's because they are in this space and they know the vulnerabilities that are there. But again, what we're doing is I tell folks, as I mentioned in the op-ed, let's look at your whole profile of your organization. When we examine credit unions for cybersecurity, it's not a one-size-fits-all approach. We're going to look at what are the tools and resources you're using for a credit union commensurate with your size and complexity. We also want to make sure that are you doing training sessions? Are you making sure that you're keeping everyone up to date? Also in the op-ed, I mentioned to folks that they need to make sure that they're able to communicate with their regulators, whether they be the state chartered entities that use us for federal insurance or even our federally chartered who come to us for everything. Let us know when there is an issue. Again, why the whole piece around the critical infrastructure, the rulemaking around the 72 hours, that's something we want to make sure that we're communicating. And then lamentably, you all, I did have to, and I do tell folks, what is your strategy going to be, not for if you are hacked or if there's a breach, but when? That is not the time to hide, but that is the time to really make sure that you have an effective communication strategy to let your members know what has occurred and what you're doing to remediate that situation. So again, communication, ongoing training, as it relates to the fintechs, just when you are meeting with us and your other credit unions, let them know about what you are doing to safeguard the data, but also to try to keep the bad actors at bay.
No, absolutely. And I think, we all are in that fight together to really keep the bad actors at bay, as we think about ransomware and other national security threats. as we kind of have a few minutes left, want to zoom out a bit just a moment. We're not on Zoom in person here, but and talk a little bit about last week's election. And I'm curious, sort of, for your views. You've served distinguishedly and for years now, and under many different administrations. And so, from that perspective, how do you see sort of the NCUA interacting with Congress in the next Congress, and how do you see that sort of impacting fintech and credit union partnerships?
Well, you know what? That's a really good question, and even though I'm appointed by the president, confirmed by the Senate, I don't know if I can really speak about anything regarding last week's election because it's not over yet.
Yeah,
so I don't know what the results are. So with that being said, I say that tongue in cheek. But what I will say, you all, no matter what elections take place in our society, the credit union system, the banking system, I try to tell folks that we are not partisans. We are here, safety and soundness. It is to undergird the American economy. It is to, and my remit is to make sure that I'm giving credit unions the policies that they need to serve their members and to do so with the fidelity to consumer protection, consumer compliance. Are they able to go out and serve underserved communities? Are they able to embrace technology? So yes, there's an election, and yes, we'll have some new members coming to town, but at the end of the day, if we as regulators are doing our job appropriately, we are focusing, again, the economy and what role we play into making sure that there is a safe marketplace for folks to do business in.
Absolutely, and I know we are almost out of time, so let me ask you, do you have any final words of wisdom for this group?
Well, this is such a wise group. I will just say that thank you for allowing me an opportunity to come and share with you my thoughts as a regulator on the role that fintech plays with our credit union system. I would say this to you all, I don't look at it as a luxury. It is indeed a strategic imperative. When I mentioned that $200,000 credit union in the basement of a church, that entity is not going to be able to go out and build a digitally native platform or go out and buy software, but what they can do is work in partnership with credit unions and other fintech providers here. So credit unions get to work in partnership, and I just want my policies to enable them to do just that. There are 132 million people expecting me and my industry and agency to do the right thing, and I certainly give you all my word that I will do my level best to provide opportunities for hope for the folks who need a bright future financially.
Well, let me just say thank you so much. I think I have to amend my statement from the beginning and say not only are you an amazing public servant, but you're also a constant learner, and we thank you for your service and for joining us today and your remarks.
Thank you for a great panel. Thank you.